Hey, welcome. I am really excited to talk about the altcoin market cap. There's a lot of goodness, and we are so close to a breakout to what Raoul Paul would call Bananaville. And I so had to put something together just to share my thoughts where we're at. So we're looking at the total three. We're on the weekly time frames. This is the crypto total market cap, excluding Bitcoin and Ethereum. The first place I wanted to look for is like the strength. How much strength do we have in this market? And one of the areas is looking at volume, and you can clearly see right here that these bars, this moving average, right? When price breaks above, that means volume is above the averages. But then when you want confirmation, you look for the bars to break out above the moving average of the volume. But not only that, as a bonus, you've got these skyscraper bars. So this is the highest volume has ever been, with the exception of right here, which looks like spring of 2021. Then we also had this clumping of these volume bars to validate the strength in this move. So this is really encouraging. And just from a horizontal structure, I wanted to share my thoughts on this. So I've got in these horizontal support lines, and you can see down here, there's a nice clustering right here, which validates why this horizontal trend line makes sense. When price action got kicked right here, it rejected hard right there and respected the bottom. And then also when price came back down for a third time, there was a lot of buying activity right here. So this is really good to see. Then when price came up through, this is why I love horizontal breakouts, which, by the way, is what we're about ready to walk into right here. But when we do these horizontal breakouts, they're one of three things that can happen to the upside. This is one of the three, and it's just an explosive move, again, to the upside. And you can see right here, price rolled over, and then came up here, got rejected. And then what I'm really encouraged is, so this trend line right here, price came down and built this nice base. Basically, it just went range bound from, what is that down here? Looks like spring of 2022. And right here looks like summer-ish of 2023. So I don't know, over a year, that just painfully going sideways. But then it just took off to the upside. Remember, I'm going to focus on this section right here, but remember, this is why I've got this black trend line here from this high anchored right there. This is considered a horizontal breakout. And just remember, right here, here's validation of what happens when price breaks out from these rounded bottoms, or these parabolas or saucer bottoms, which is exactly what this is. There's just so much goodness. So in a few minutes, I will dig into this section here. Okay, so I've gotten rid of the horizontal trend lines, support, resistance lines. This is a different view that I wanted to share. What's interesting, there's always a channel somewhere, and this is a historical best fib channel. I like this a lot, and let me just tell you, there's a few validation reasons why. So we've had the beginning down here. We had a great touch there. Price action came up there, got rejected for a second time, third time. If we can zoom in around the middle, you can see this blue line right there. Price came up to the blue line, got rejected. It got hung up on the midline. If you can see that orange dotted line, got rejected, fell through it. Here's another nice area of validation, the section of this channel. But then we had a false breakout right here, got kicked down to the bottom, as I mentioned earlier, and then it got snagged right here, built a base right on top of that. So this validates to me that so far I like this. Price came down here, respected it, had a nice reaction to the upside. And then when price came up here, didn't like it at all, fell through. And then if you notice right around on this orange dotted line, you can see right here, it's just hanging out here. It fell through, support, and now we've got all this support. This trend line is going to come into play here in the coming months, if not coming weeks. I'm going to keep this on here so we can illustrate what I think is going to happen. So now I'm going to put this trend line back up there. I'm going to do this. All right, from a structural standpoint, I really like that. You've probably heard me talk about this before if you've seen any of my videos. I love rectangles. So here is a textbook multi-year rectangle. Nicholas Darvis, dancer in the 50s, he put these rectangles on the map. I mean, these are typically measured moves. So what they do is take the top of the rectangle all the way down to the bottom to like the lowest point of the price action. If I were just to do a crude, and I'm getting ahead of myself a little bit, but if I were just to do a crude example, and I'll kind of take it not to the deepest part, but I'll just go right there. If I were to swing it up there, now if I were to go to the deepest part of that, it would actually come right up to the top of that channel, which is interesting. Now, just for kicks, let's put in a couple anchored VWAPs. So let's zoom in here. I'm going to focus on just this section now for the rest of this video. So this orange line right here is the anchored VWAP. So this is the +1 standard deviation, and this kind of olive green is the +2 standard deviation. And then right up here, this light green colored is the +3 standard deviation. So when price does finally break out of this multi-year neckline, this black line right here, the next logical place where we're going to see overhead resistance is this +2 standard deviation, which I think is going to come into play. I'll share with you from a price action standpoint or how I think this is going to impact price here in a few minutes, as well as this blue trend line, as well as this last +3 standard deviation. So I'm going to get rid of those guys. Now, just from a strength standpoint, let's just overlay some moving averages. These are the weekly moving averages. So everything looks really nice. There's a few things that are somewhat concerning, but I would say somewhat. So you can see right here, this is the SMA 100, this line right there, which is below the SMA 200. Eventually, we're going to want to see a bullish crossover of the 100 up through the 200. But based on the angle of the 100, I see that happening here in the next, 3-4 weeks, which is encouraging. We've got the EMA 55, which is right in line with the SMA 50, which you can't see, but the SMA 50 is this green line. And this dark blue line is the EMA 55, which is nice. And we've got the EMA 20, and then we've got this bar, this weekly bar resting nicely on the EMA 9. What I like about this, the spread on the moving averages, they're not getting too spread far apart, and they're actually still early stages of creating this nice formation. So those moving averages look nice. And I'm going to bring it down to the daily time frame. So we're still using the weekly moving averages and just looking at those are the daily bars. Now what I'm going to do is I'm going to get rid of the weekly moving averages and just take a peek at the daily moving averages. I'm going to open this up a little bit. It's a little crowded. Yeah, this is nice. So we've got the SMA 200 right where it needs to be. The 100 is above the 200. And then right in here, there's a little competition. It's a little clustery, but we've got the moving averages nicely coming into formation. But the thing I care about most is this green one right here. This is the SMA 50. Every time I see the SMA 50, I think of Stan Weinstein. But what I love is that price action is now officially above the SMA 50. The reason why I like that is that's because when price gets above these 50 SMAs, that means it's breaking structure. In this case, breaking structure is a good thing. So we still have some work to do here, but I like how price action and the moving averages are forming. Now, just from an Elliott Wave perspective, something that caught my eye is, here's the second wave. This section right in here, this is a textbook third wave. I'm going to place the top of the third wave. Here's the bottom of the fourth wave. And we're going to find out where price action, when it gets to this fifth wave, we'll zoom in here in a second. But again, I anchored for the beginning of the one wave right here at this low, went to the peak. So here's 1 and then 2. And again, this aggressive move to the upside is a 3, a textbook 3. Price came down here for a corrective fourth wave. And by the way, the fourth waves and the second waves are usually opposite, somewhat similar, but opposite. You can clearly see that this one's more drawn out and this is just more aggressive. Now we're actually early stages of the beginning of this fifth wave, and these can be typically explosive. This is where the retail, the US consumers come in, not the smart money, but because retail starts to come in here. So these things can be extremely explosive. Let's zoom out. I think the best way to probably find where price action, and we're going to zoom back out in a second, but if I were just to do some basic fibs, again, I just anchored right here at the top of the third wave for the fib, and then down here at the bottom of the fourth wave. And here's what I've learned. Cryptos love the Fibonacci sequence. So when price breaks out above this one line, again, that's the high here at 1.16 trillion. God, it's crazy. I remember trading cryptos when the entire market cap, including Bitcoin, was like 30 billion. But when cryptos break out of the one or the neckline, I'm going to put this right back there. But what I was saying is that price action, these 1.618s, these golden zone, they act like magnets. So to me, it's not a matter of if, it's a matter of when price action is going to find at least the 1.618. So that makes me want to put the top of the fifth wave right here. But let me just say this, as I was alluding to, this is when retail money really starts to come in. There's a lot of optimism. So at a minimum, I'm seeing the 1.618, which is the 1.4 trillion. Then we have the 2. It's a whole number in the fib sequence. And this should act as strong, one of these should act as strong overhead resistance, which is at 1.57 trillion. Let me just do a quick measured move. Again, this is for the altcoin market cap, not necessarily your altcoin that you own. By the way, to get breakout of this high, we need another 12% before we literally get into Bananaville, which is going to be extremely exciting. And when price does break out of that, we're looking at about another 36% to the 1.618. I think because where we're at with Trump coming into office, the inauguration, we got a cabinet that's pro-crypto. Boy, this is definitely not out of reach. So that's another 53% to get to that 1.57 trillion or the 2 level in that fib sequence. So just for a second, I zoomed back out because this blue line, this definitely is going to come into play. Just not too sure how. Because it's a multi-year trend line, I'm going to say it's going to act as overhead resistance. Now, with that being said, though, let's zoom back in here one more time. I'll share with you to wrap up this video where I think price for the altcoins is headed. All right, so here's what I think is going to happen. Well, by the way, between price action where it's at now and this neckline right here, it may take a variety of different ways to get there, but when it eventually does in the coming weeks, I think, based off of this, because again, we're on the weeklies. So once it finally does break out above this horizontal multi-year neckline, it could do really one of 3 things. Is one, it could just get aggressive and explode, just basically parabolic, the third wave right here. But it could literally just go right up there. And by the way, so that 1.618, I actually think, again, because of the new cabinet coming in and the Trump team coming in, all pro crypto, I think we could potentially break through this blue line, the overhead resistance, and get to that 2 level and then get kicked really hard. Then the next question, how far are we going to correct and for how long? So time will tell on that. Then once it does correct, then it'll go back to the upside. But let me get rid of this. Let me share with you another example of what I think could happen. So again, it's all assuming when price does get above this. So it could pop up there. We could go sideways just for a bit, and then we could shoot up. Let me extend these guys. There we go. By the way, I think we're going to have a nice first half, the first few quarters of 2025 before we see a really healthy correction. But I would say, you know what? I'm going to skip the last kind of roadmap for price action. Because either way, we're coming into these fifth waves and we've got retail money coming in now. I really think it's going to be either something like this or just the last time when price does get above it, we're just going to just get explosive and we're just going to pop right up there. But then the next question is from a retrace standpoint, what does that look like? But I'll cross that bridge when we get there later and determine where the bottom will be. But gosh, everybody, if you have any doubt, please don't. We are in these current moves that will test your patience. I've been doing this since 2016. I think I've gone through, I don't know, almost a handful of bull runs now. And again, your patience, if you're a bag holder, is probably getting tested. If you listen to social media, it's all over the map on what cryptos is doing, what this world is doing. But just based off the technicals, everybody, just hang in there. We still got some work to do. But once we get above this horizontal black line right here, like Raul Paul says, it is gonna be Bananaville. Anyways, thank you so much for sticking around. I hope that was helpful. If you have any questions or comments or need any help, just reach out to me anytime. And thanks so much.